Good morning. Good morning. Good morning. Get my goodies on here. Get my volume up here. Get my chart shared, and we will check out some goodies for the day. Happy Monday, everybody. It is January 19th, 6:30 a.m. my time here in Kansas City. So we're going to take a look at, let me get my chart shared here. We'll start with the calendar. As you guys pop on, if you would, just in the chat, say hello. Let me know that you're here. And as always, let me know if you're looking at any specific tickers, any specific Forex tickers, index tickers, Bitcoin, gold, silver, oil, any stocks. Okay. I'm definitely down to be looking at some stocks too. With the supply and demand method that I use, it's good for really any chart, anything with some liquidity, anything that moves, right? Anything with decent volume. I've even tried it on penny stocks, and it can work pretty decent, even though there's not the most liquidity there, except for when big announcements come out for specific sectors, specific types of stocks. But yeah, I would say anything with some decent liquidity, decent volume, if you know what I mean. So yeah, just let me know as you pop on, say hello, let me know where you're from. And we'll get going here in just a moment. First things first is as always, like to go to Forex Factory, like to check out the eco calendar and see what is on the pike for the day. And today, here in about an hour, we've got Canada on the board. Okay, we got some inflation numbers for their month-over-month number, the median, the trend, all that for the year-over-year. As far as the month-over-month, looks like they're wow. There we go. Looks like we're projected to go down below zero. So 0.1 was the previous reading on the loonie, and as you see here, it looks like a 0.7% decline down to negative. 0.5. Let's get my math right, Tiger. 0.1 to minus 0.4. That's minus 0.5. There we go. So, yeah, I mean, if that number holds true, then that's obviously slightly bearish for the currency, right? But it would be slightly bullish for the citizens of Canada's pocketbooks. Anytime they're going to go buy something, purchase something, right? Groceries, gas, all that type of stuff. So it's kind of one of those double-edged sword reports, the inflation numbers, right? So that's what we're looking at here. Like I said, here in about just under an hour. The Eurozone, even though this is a yellow folder event, they did have their inflation numbers come out. It's listed as a yellow folder event, but I really pay attention to this because it has a bearing on the euro. I mean, let's face it. It may not make things jump up and down like crazy right away as far as assets go that are tied to the Eurozone, but for the individual currency itself, it has a bearing. So as you see, we did have a 0.1% decline, so not a big decline, but it was a decline nevertheless from 2% down to 1.9. So obviously it's in red. Obviously it's slightly bearish for the currency. So we'll take a look at some euro-based pairs here in just a moment. As far as the rest of the day goes, that's really about it. That's really the main topic for the day. The topic du jour is Canada inflation. So let me just flip this over to the weekly chart of the red folder events, and we'll just see what we got going on the rest of the week besides today's inflation for Canada. So yeah, again, pound tomorrow, do have the claimant count change, slight decrease on it. Governor Bailey is going to be flapping his lips at 3:45 a.m. Central Standard Time tomorrow. Okay, we'll see what he's got to say, and I'm pretty sure, what was that? The financial stability report. Okay, so that's coming up tomorrow morning in London. Treasury Select Committee, and then that's it for Tuesday. So pretty decently light day Tuesday as well. Now, Wednesday, we've got the CPI for the British pound. That's their year-over-year number, and they're projected a 0.1% increase. So very, very slight bullish read for the currency if all comes out as planned. The WEF annual meetings, and then President Trump speaks at 7:30 a.m. So that'll be while we're on stream as well tomorrow, Wednesday morning rather, 7:30 a.m. And I think that was at the WEF as well. Okay, the World Economic Forum. And that's in Davos. That's in Switzerland. So that's what this meeting. That's what this is right above as well. Okay, the World Economic Forum annual meetings. Different times throughout. So yeah, anytime they're speaking in Davos, guys, that's always you just never know what's going to come out of that. Usually, some pretty big events come out of that. Anytime the premiers, the prime ministers, the high up peeps, they get in there in a building and start flapping their lips together. So that's Wednesday. And then Australia later in the evening, Wednesday, 6:30 my time, 6:30 p.m. That's their employment numbers coming out. Employment change looks like they do have a pretty decent looking forecast. I mean, the previous one was not good at all. They had a negative 21,000 employment change number. So that's not good. That's not good at all. Now, Australia has a decent currency going on right now. I mean, it's nowhere near bearish. If anything, it's slightly on the bullish side, but I would say it's still kind of neutral. So not really any super strong readings long or super strong meetings short. But this could definitely kind of buoy it and balance it out a little better and get it a little bit of a boost if that does come out that way. Now, the unemployment rate number, it could kind of wash that out because it is showing at a 0.1% increase on their unemployment rate as compared to the previous period. So 0.1% may not sound like a lot, but that's a chunk of that's a chunk of the Aussie citizens out of work. Okay, if you're out of work, you're not contributing to the GDP, right? Spending in the economy. So that's kind of an important thing. But anyway, that's Wednesday, and then Thursday got some inflation. We got the Fed's favorite core number come out. That's the PCE price index, the personal consumption expenditure price index. Coming out during our stream as well, about an hour into it, as well as the final GDP. That's the quarter over quarter number. They're projecting it to stay the same. So that's all coming out on stream on Thursday. Later in the day here in the States, New Zealand's inflation numbers coming out for their quarter over quarter. Now theirs is actually projected to go 0.4% increase, which could be a very slight boost for the Kiwi. Oh, I said that. I'm sorry. I thought that was 0.1. That's 1. So never mind. That's a decline. That's a 0.5% decline. So that would be bearish. I thought that said 0.1 for a second, but it says 1. So never mind on that. Yeah, another decline. So inflation, if just by looking at these first 3 reports for inflation, guys, it looks like inflation's coming down, does it not? Just a little bit slightly worldwide. Again, that's bearish for the currencies of these countries, but it's bullish for the pocketbooks, right? So think about it that way. It's always kind of a double-edged sword when you're talking inflation numbers. You're never going to make everybody happy on these, okay? Because what's good for the currency is going to be negative for their pocketbooks and vice versa. So you can't, in trading, you can't please everybody. And then later on Thursday is Japan's policy rate statement. Now they are projected to remain the same at 0.75%. They are going to have their policy statement to follow their press conference. This is a big week. So this is a big potentially a big couple weeks for the yen, okay? Because of that dreaded I word. Okay, what's the dreaded I word for the yen? It's intervention. Intervention. Okay. Intervention. So that just basically means they're very big about manipulating their currency. Whenever it gets really weak, they like to come in there and buy their yen. And historically, when they've done that, dollar yen as an example, euro yen, those currency pairs, I mean, you see those things just completely go crazy to the tune of a couple thousand pips at times, guys. So huge potential moves coming on the yen pairs, the yen-based pairs. Dollar yen, anytime it gets up to where it's at now, which is around the 160 level, okay, 159, 160, 161, give or take, give or take 1,000 pips. Okay, anytime prices get up to this area, they have a tendency of buying their currency and just flipping it on its head and driving it, driving the yen back up, and then obviously the base currencies would be going the opposite way. So, sorry about that. Test. Okay. Sorry about that. This is my daily once or twice where my stream just completely goes away from me. So let me get my chat again. That's YouTube Studio for you, by the way, ladies and gents. I don't know why it disconnects all the time, but it does. But hey, it's free, right? So maybe one day if I get a whole bunch of viewers, maybe I'll be able to get this set up a little different. Get get a third party company, maybe an OBS software or something. I've tried making it work and I just can't figure it out. I'm a trader. I'm not a tech guy. I'm not. I like to make YouTube streams, okay, content, social content. That's what I'm good at. But when it comes to all the ins and the outs of third-party softwares and this and that, that's something I might eventually have to hire somebody to do. But anyway, I digress on that. Getting back here into the calendar, PMI data on Friday. Yeah, that's right. I was talking about the British pound because their numbers have really been in the dump of late. And when I say of late, I'm basically meaning like the last month and a half. They've had the bulk of their high impact events miss expectations. Okay, and that's not good for the currency. Now, the pound and the Swiss franc are in the same spot. They're both down. I'll just show you a visual of it real quick, and you'll be able to see what I'm talking about. Fundamental. Let's go economic heat maps. Let's go down here to Echo Surprise Meter. You know what? Let me reshare my stream just because I think I shared it incorrectly. I want to share it as a window so that every time I change windows, it changes as well. There we go. This is what I was trying to show. So yeah, back to the pound. Okay, the pound and the Swiss franc. You see that they've only exceeded expectations on 17% of their reports. They're just not doing that great. Okay, so any reprieves that they can get, I'm sure they'll welcome. So just going back over here to that retail sales again, it's a minus 0.1 is what their current number is, meaning their previous release. They are projected to go to straight up zero, so that is a 0.1% increase, which would be good for the currency. So again, going back over here, flipping on to the UK specific heat map. Okay, here's our retail sales number right here. Again, their previous number was bearish. So if they could get a bullish report come in here to balance out the one that we got last week for the GDP number, which I would suspect we have a chance of doing. I mean, think about it. GDP number grew, retail sales number. That's what they're looking for as well. They're looking to get out of this zone down here. Anything under 40% is just really not the greatest, in my opinion. When you have 40 to 60%, that's kind of ho-hum, kind of neutral. It's not really bullish, but it's not really bearish. But when you get under 40%, especially under 30%, okay, this is just too bearish of a number. So do I want to really get that excited about going and putting on a 2 to 4 day swing trade for a British pound based currency pair where I'm buying the pound? Probably not. Okay, because this again is what the banks are looking at. The big banks, the financial institutions, the hedge funds, okay? The big money, the smart money. This is what they care about. This is what they care about when they're making a decision to go buy or sell something. Okay, they care about the growth numbers, the jobs numbers, when we're talking about the major currencies of the major economies of the world. As always, they're not looking at a 5 or a 15-minute chart, okay? You hop on to CNBC or whatever, BBC Finance or whatever worldwide finance news that you have in your area. You don't hear them talking about that. You hear them talking about the GDP numbers. You hear them talking about the PMIs, the retail sales, unemployment, okay, interest rates. Okay? That's another big one. That's what you hear them talking about. So as always, we like to ride the coattails around here. Okay, I don't care about a 5 or a 15-minute chart. I do care about a daily 4-hour chart, but that's because that's what the smart money's looking at. They're not playing around in the noise, the 5-minute, the 10-minute time frames typically. Okay, they've got algorithms for that. They're high frequency trading algos, right? But they're prop traders, they're swing traders, position traders are looking at the higher time frames after they pay attention to what's going on with this data here, right? So anyway, and then as far as the dollar goes, while we're on the subject of the heat maps over here, as far as last week goes, we actually had some pretty good data. Okay, we had a retail sales number that came in hot. We had a PPI number that came in hot. Okay, inflation-based number, and then the jobless claims number came in under 200,000 for the first time in a few periods. So it's really come a long ways. The jobless claims. I think I should be able to. In fact, let me specifically go to the jobless number. Let's go inflation data. Labor market, unemployment claims. Okay, here you go. So here's your US dollar unemployment claims, your weekly unemployment. Okay, we were going up from summer of last year, okay, summer of 2025. We kind of started spiking up a little bit. Let me get rid of that. Started spiking up a little bit. We really kind of peaked on September 11th, okay? And then from there, we just had a nice steady decline. We had a little bit more of a hiccup at the kind of the early part of December, but each week since it's just been going down. It's been looking pretty decent. Okay, these aren't too bad. These aren't that. I mean, they're not great, but they're not horrible either. Like they were. It's a decline. You can see the revisions there. You can see the kind of the moving average, if you will. If you've kind of followed the red dots, that's going to be the forecasts. So we've consistently been performing better than the forecasts. I mean, look at that. The tops of the blue bars is the actual number. The red dots is where the economists predicted. So, it's just we've been performing better than the economists give us credit for. So it's been getting better. I'm not saying it's great, but it's definitely better than it was, especially back here, in middle September. This is what you want to see. You want to see those downward trajectories on the numbers that you don't want to see very big bars on, if that makes sense. So anyway, going back to the dollar. So yeah, 58%. Okay, so not quite bullish, but not anywhere close to bearish either. This thing's just kind of neutral. It's not really a super strong. In fact, there's only one US dollar-based currency pair I'm even paying attention to, and it does involve buying the dollar, okay? But it involves the dollar Swiss. So let's take a look at our top setups, and you'll see down here, as far as dollar-based pairs, dollar Swiss is giving me a bullish signal, a +5. So as always, when you're talking the technical analysis, the sentiment analysis, and the fundamental analysis, looking at all the different parameters, the commitment of traders, retail sentiment as far as your sentiment analysis, okay. Fundamental analysis, looking at all the GDP, the inflation numbers, the jobs numbers, okay, economic growth, consumer strength. When you start adding up all these different indicators, 5 or higher is, given a point, a +1, typically a +1 for a bullish report, or a -1 if it's a bearish report. You add it all together, when you get 5 or higher, you got a bullish asset on your hands. Same is true in reverse. -5 or lower would be bearish. So there's the trade plan right there. It's just a matter of timing this on a chart. Okay? This doesn't tell me to go out and just smash the buy button or smash the short sell button. All this tells me is, Tiger, you have permission now to go look on the chart and go time this trade, time a potential trade. So let me see here real quick. Give me just a second, guys. Sorry. All right. I was just taking a look over here off screen at something. So anyway, that's it. Now I am currently in a Bitcoin long, because as you see, Bitcoin has jumped on the list at a +7. Okay. So this is a trade I got in yesterday evening. Sorry, I got to turn off my heater. This is a trade I got in the other day, yesterday, fact, I should have it right here. So let me pull up my trade locker. This is my 250K challenge account. And this is one that I have. I've had this one, yeah, for a little while. So if I go flip on over here to Bitcoin, okay. So Bitcoin dollar, this is where I started. So because I got my bullish signal over here, okay, technical analysis is favoring Bitcoin. We finally had a break up. We finally had, I guess you could call it I guess most people call it a change of character. I just call it a break of structure. Daily 4-hour time frame. Morning, Xander. Things are going, my friend. I'm here. I'm here. I'm going to show up every day. All right. Yeah, I was just letting everybody know I'm in a Bitcoin trade right now. So because it is giving me a +7. So yeah, technical analysis, the sentiment analysis is looking really good for Bitcoin right now. And then the fundamentals, they're a little bit shakier, a little bit kind of half and half, some bullish signals, some bearish signals. But by the time you factor in the sentiment analysis and the technical analysis, the fact that we finally on a daily 4 hours started having some higher highs and higher lows, it's finally given a reason to buy again. So let's go back over here to Bitcoin. Okay. So obviously, guys, Bitcoin just stretching all the way back. I mean, this thing's just been a monster. But Bitcoin has a tendency of just balancing out sideways for a couple, 3-4 months at a time, like it did back here in middle of 2024, right? And then going back over here towards the end of 2024, beginning of 2025, same thing, just kind of balanced out, and then it dropped. And what did everybody say when price was down in this area? Oh, Bitcoin's going to zero. It's going to zero, Xander. It's going to zero, Rodrigo. Right? Good morning, by the way, Rodrigo. Can you show how you entered Bitcoin? Yeah, absolutely. Yeah, that's what I'm going to do right now. So yeah, just again, I got my bullish signal back here because of the technical analysis, the sentiment analysis, the fundamental analysis, looking at all the inflation, jobs, consumer strength, and economic growth numbers. All this does is gives me permission to go look at a chart. This does not tell me to buy anything. It just says go find a place to potentially time it. So when I flip it over to the Bitcoin chart, obviously we had another decline, okay, of late, talking about the last quarter basically of 2025. And then when price got down to here, the thing I was looking for, and I might have even put it over here on the regular chart, I was looking for some breaks of structure to the upside on some higher time frames. I think I still have it drawn up over here. Let me go look. No, I guess. So the last kind of like impulse move down was where I drew over here, this red highlight. I think I did that on a 4-hour, but either way. Yeah. So at one point, just looking back in time, this was an impulse leg, broke some structures, and we kind of stayed in that range for quite a while. Okay. So we did finally close back over in this area up. Now we wicked through. So imagine this, the top of this red line right here. Actually, I can just do this for you guys. Let's just put a line right there. So we finally wicked through over in this area, but not with a whole lot of conviction. I don't even know if we had a close. Did we actually have a candle close above there? We did, but even when it closed, it had wicks and it didn't like push through. You know what I mean? So in my opinion, even though it kind of wicked through, it was still kind of sidewaysy. This wasn't a very convincing move above this structure point, in my opinion. Oh, my chart not showing. Gosh, dang it, guys. I'm sorry. Give me 1 second. Bitcoin. This thing, I swear, it's the biggest pain in the ass I've ever had to use. YouTube Studio, man. Make sure we're good. Okay. I have YouTube over here on my trading computer to try to peek over to as often as I can to make sure I'm still showing. So, okay. So yeah, just again, guys, just looking at Bitcoin, we had this impulse move back here. Okay, this was late November. This was Thanksgiving period over here. And I was basically looking for a pretty strong close above this swing high. Okay. Because that swing high, again, was an impulse leg down. It broke some structures. So this to me, back in early December, was not very convincing. So I didn't worry about that. Okay. We kind of broke through here as well. Okay. This looked a little better because the candle, the body of the candle was a little better, but we still had a pretty decent wick on it. So it still, to me, looked like there were still some sellers pushing it down. Sure enough, it did. Pushed it down to a demand zone, in fact. Fast forward in over here. All right, yeah. In this area here, this is where I really started paying attention to it. Because we broke through with some more gusto, okay? When we broke through that white line, that former swing high, as you can see on this 4-hour candle, we had a close at the top of the candle. That was the important thing on this. Okay. Close at the top with a big wick underneath, meaning the buyers came in and rejected these sellers. So that right there was kind of my first time looking at this area like, oh, okay. Now, if I get a discount, I'd be probably interested in taking a stab at this. Guys, let me know, is my chart showing now? Because it looks like it is on my end. Yeah, I think it's showing, but just let me know. So anyway, so this was my first point of getting interested in a discount. Now you see right here, I've got a couple boxes, right? So starting out on a daily, let me start there. Excuse me. Okay. I was looking at this area here. So there's a daily demand zone. Now I got to be honest. I drew this up, but I still wasn't that excited about this zone because if we look to the left, we got just a ton of candles, right? A ton of sideways chop. So the reason I'm not as excited about this demand zone is because to me, that's like what, 3 weeks of sideways movement. This is a daily chart. That's a lot of time for the big banks, the institutions to be getting their orders in, to accumulate their orders to push this thing up. So upon returning, I don't think I'd be that excited about seeing if we have a whole lot more orders from the banks, who are the ones that move the money, pushing this thing back up because they had plenty of time to get their full order in. Remember, they have to accumulate their position. They cannot just simply, like you and me, they can't just simply put in an order and get into it right then because we're putting in small orders, or small peanuts compared to the banks, right? They're putting in hundreds of thousands, millions, okay, tens of millions, hundreds of millions in their positions. So they have to accumulate. They have to slowly enter so they don't spook the market. If they spook the market too soon, price is going to fly up and they're going to get a horrible fill. So a little here, a little here, a little here. But to me, this seemed like quite a bit of time for them to get it in. So I wasn't too excited about this area. But what happened? Okay, we fast forward a little bit. We obviously had a pretty strong close at this point. In the wake of that, though, we created a brand new daily demand zone. Why is it at the top of the proximal line of the demand zone, the daily demand zone? We skipped the leg out candle, which, by the way, had a pretty good volume spread analysis spike, which is what I like to see because this shows institutional activity. And there goes my damn chart again. God dang it. I swear, guys, I don't know why it does this to me. Some days it'll do it like once. Some days it'll do this like 3-4 times. So give me just a second. I'll get the chart back up again. I know, Xander. I just don't get it, my friend. I do have a lot of time on my hands now since I'm unemployed, right? Do have a lot of time, so I guess I better probably figure out OBS. I'll try. I'll give it another shot. I got a call today with some guys in London, actually, just looking for some projects, trading-based projects, content creation, accounts trading. So we'll see how that goes. But as of right now, as of actually the 8th, that's when I kind of went on my own. Okay, contract wasn't renewed from my employer. You got a lot of you guys, probably most of you guys know who that was. And so, hey, I'm out on my own now, looking for some more opportunities. But anyway, uh, I say that to say I'll probably spend some more time now trying to figure out the OBS software because that's what they were using. And then that should avoid whenever my chart drops. Okay, it's a pain in the ass. But anyway, back to Bitcoin. Got a daily demand. It's got a really strong looking gap. The VSA, the institutional activity, starts picking up. That's what I like to see. It broke a structure. Oh, by the way, it broke through a former support and resistance line on a high time frame. That's this blue dash line. Okay, if we scroll back over, I guess it would be here. I thought that went further back. I might have moved it by mistake, but nevertheless, break a structure. Okay, so that's daily. And what's my favorite confluence? Daily 4-hour. So now we come down to the 4-hour chart. And I got 2 4-hour demand zones in here. Now I got some choices. And oh, by the way, I do have a gap from there to there. It's a little bit, it's not as strong looking on a 4-hour. But the point is I have a 4-hour demand zone inside of a daily demand zone. That is my favorite. They lost big time. Yeah, of course. I agree. But you know what? At the end of the day, you know what? They tried hard, though, to make it work as far as because at the end of the day, they put in a lot of money to try to get viewers. So just didn't work. Just didn't work. They couldn't quite get it figured out. And so, when you run out of a budget, you kind of have to make some changes. So that was it for us. But now they did say that they'll probably, if they decide to give it another go, they'll let us know. But that would probably be like later in the summer, I think is what they said, late summer. They are talking with some gurus, some YouTube gurus. Okay, they've been talking to them for a while now, but I think they're trying to come up with another plan to see if they can give it another go. Because got to get the viewers. It's just the way it is. It's the way it is when they're dishing out tons of money like they're doing. So anyway, I digress on that. I've got 2 choices here, guys, for this Bitcoin trade. Now, there's demand zone number 1, and then there's another one deeper. Well, typically, I want to find the demand zone with a gap, which that has a gap, as close to the origin of the strong move up as possible. This would obviously be your origin of the strong move up, right? So that would be that demand zone. But I have to also match it up with where the volume spread analysis movement is. And as you can see on that demand zone candle, if you look straight down, little tiny green candles, right? That's not attractive at all. What is attractive is the candle that I ultimately bought on because the leg out candle is where your volume starts picking up, your institutional activity. Okay, the institutions really started driving price, really started make things happen here. So that's where I want to buy. So this is really one of the exceptions to the rule of, hey, Tiger, go out and find the demand zone or supply zone if it were flipped. That's as close to the origin of the overall strong move up as possible. Because there's no volume. There was no trading activity. Just not much at all. I go to where the activity is. Go to where the action's at. Okay. Origin of the strong move up. It obviously broke a structure. That's key for me. It did it on the daily and the 4-hour. Okay. Even this 4-hour. But just solid green candles up, right? To push through the highs. And then it kept going. So that's pretty strong to me. So I actually feel like I might have been a little bit aggressive on this because when I did get into this trade, I actually just put my stop loss. And I know I've talked about this a time or two in the past. Do I want to put it under the 4-hour zone? Do I want to put it under the daily zone down here? So I ultimately selected, my, oh, come on now. I ultimately selected under the 4-hour demand for my stop loss because that's going to give me a much better reward to risk versus if I do it all the way down here, right? So probably a little aggressive, but we're going to give it a shot. Okay. Because this one is this particular trade, yeah. I don't have to close this trade on a Friday like I like to do my other trades because Bitcoin is a 24/7 market. Thankfully, I can always close this trade on a Saturday if I want or a Sunday. Right. And so, anyway, I went for the slightly aggressive one. Now, again, brand new people, beginners, if you're gonna be looking at supply and demand zones, it's probably a smart idea to take into account the whole daily zone. But I've seen enough of these zones to know where I think prices have a more likely, chance of a moving. And to me, I would think it would be this zone that would move. Because if it fails this zone, okay, if it comes down and stops me out for a small loss, I don't feel the greatest about this demand zone because partially, again, there's no trading activity. There's very little. So in other words, if it comes through and tags me out for a small loss, it's likely just to keep going. Okay. Very likely just keep going. And then had I had a demand zone down here, a stop loss down here, it would have just tagged it anyway. So anyway, that's kind of the way I see this. But again, I've got my stop loss right about that area there, as we see over here on the 4-hour, right here. Okay, there's my stop loss right there. Okay. So again, it's just below the top demand zone. That's the one I'm looking at. It got real lazy when it did hit. Okay. It just kind of went sideways, but finally we had a tiny bit of movement about 2 a.m. here while I was asleep, drooling on my pillow. And now it's kind of went sideways again. So there's nothing I can do. I'm just going to let it do its thing, ignore it, and not micromanage it. It's very easy to, it's like being in a desert, walk in a desert and you can't find water, seeing mirages, right? Seeing oasis, seeing beaches with water. And you get there and there's nothing there. It's very easy to be sitting here watching, especially on the higher time frames like I trade. Okay. Where I'm in trades typically 1 or 2 days to 4 days, 5 days. Okay. It's very easy to start looking at this and say, oh, wait, I see something. I see something. Just stay the hell away from it. I got a profit target high up. Going back to my 4-hour time frame. Okay. I'm basically looking for a retracement all the way to the top. Now, I will say I have to be careful about this area here. This area right here, that's a pretty strong supply zone, is it not? Let's wrap a rectangle around this thing. In fact, I need to delete some of this old crap over here. Okay, we got a supply zone here. So this is going to be potential landmine number 1. Right here. Now, I feel like that's quite a bit of time sideways if this was any major, institutional activity, because this stayed in that area for quite a while. So I don't think I'm ultimately worried about it, but I would at least expect a bounce. So let's say we come up here, right? I would expect it to at least give us a bounce downwards. But I don't expect it to keep going. I would expect it to kind of rebound and dick around and then finally come back up. That's what I'm looking at. So we come in, there will be unfilled orders here, unfilled shorts. Okay. So I definitely expect some type of bounce, but I expect it because and coupled by the fact that on a daily and a 4-hour time frame, we're getting those higher highs and higher lows finally. Okay. So I'm just gonna, it's just time for me to step away and let it do its thing. I'll check in on it once or twice throughout the day. And there goes my damn chart again. God dang it. Window. Okay. All right. So anyway, that's the trade on Bitcoin. And by the way, if you guys have any other assets, let me know. If you have any other tickers. Xander, you said you're so angry at yourself. I had a Bitcoin trade from last week running. It was in nice profits. And it just turned back. Basically can buy a Big Mac from the profits. Hey, a Big Mac's better than the dollar menu burger, right? Yeah. So how far how much unrealized profits did you have before it went against you? Let's see here, guys. Yeah, let me know. And when you have a trade that goes in profit, do you start trail stopping? Do you start moving it up manually or letting the system do a trail stop? I'm just kind of curious. Because as always, guys, anytime I get into a trade, my goal number one is to get rid of the risk as fast as possible. I'll tell you why it sweeps your chart every time, Xander, because the banks know where those stop losses are. Which is why, just as an example, again, you see where my stop loss is on this order, right? So this is why goal number one for me always is, look at the zone. So if I'm looking at the proximal line, there's my proximal line, meaning it's the top of the demand zone I'm interested in. I want to measure to the stop loss. Okay, once I'm in this order. So in this case, it's $1,080. Okay, $1,080. $1,080. Yeah, I said that right. And I want to measure one unit of this to the upside. So again, I've started with the top of the demand zone. I measured my stop loss. That's $1,080. And now I want to go $1,080 in the opposite direction. Okay, it's going to be somewhere in this area. So once we get up in this area, that's where I'm going to consider moving my stop loss, okay, to break even. Now, as you see, I didn't get in on the exact proximal line of the zone. I got in a little higher, right? Because I was waiting for a little bit of confirmation. So in this case, well, yeah, I mean, I guess that's never mind. Yeah, I'd still be wanting to move it to break even. So that's the idea, is get rid of risk. So in other words, once it gets to a 1-to-1 profit, 1-to-1 reward to risk in my favor, that's where that's just my personal way of getting rid of risk. It makes trades a hell of a lot easier when you know you've gotten rid of the risk and you've essentially got a free trade on your hands. Now, if it goes against you, c'est la vie. It wasn't meant to be. If it's a good zone, it should take off. It shouldn't just dick around sideways. It should go. Trail stop loss, yeah. Yeah, so that's my thing. Sometimes I'll do a 1.5 to 1. Like in this case, it might be a 1.5 to 1 since I did get a little bit higher up on my order where that green line is. And this thing dropped quick. That's why I got such a bad fill on this. Hey, let's go back. So for me, this is 5 p.m., 5:30 p.m. my time, 5:30 to 6 p.m. And we just had a big, ugly drop. Big, ugly drop. Now, as you see, in fact, I think I need to go to a one minute time frame just to show this a little easier. Okay, I didn't have much time to think on this. But we had a big drop. Now, there was a bunch of accumulation from certain institutions on Bitcoin. I saw one article where they were talking about a pretty big increase in their holdings. A couple different companies. I think one of them was Popeye's Chicken or something. Excuse me. Or Chick-fil-A. I don't know what company it was. Adding in a whole bunch of Bitcoin. Well, anyway, that came out and price just dropped. And what did it do? It dropped right into my demand zone. So as you can see, if we zoom into this thing, price comes in. This is where my alert goes off. And then I immediately get a kind of on the 1 minute time frame of, almost a bullish engulfing. You pretty much closed at the top of the wicks here. But then you look at this thing on like a 2 minute time frame, and let me go back over here real quick. It just looked, yeah, right here. This is what I saw, ladies and gents. This is why I got in this trade. So when price dropped in on my 2 minute time frame, is that not a super strong rejection candle right there? Okay, you had a, what do you call it, a tombstone or what? I don't know all the names of the candles, but basically you had a big sharp drop in price, but the buyers stepped in and said, hell no, we going back up. So when they did that, they closed pretty much at the top, and then it was the push up from the next candle is where I got in. Okay, that's where I got in, but I did that because of that candle. that candle. Okay. Yeah, not a whole lot to be said on that. I mean, that looked like a great place to get in. And then as you can see, just went sideways. I mean, it went sideways for quite a while before ultimately kind of giving me a little bit of a bounce up, but now it's retracing again. So, but again, if and when price gets up to this area, yeah, you can bet I'll be probably choking my stop loss up in this area somewhere, because I do expect something like this. So if this were the exact case where we get kind of a push up, then I'd be looking to move my stop loss under this point right here. Now, it's not saying it's going to look exactly like this, but the idea is my swing low. When price is in this area right here, I'm going to be trailing my stop to lock in some of these unrealized gains, right? But I need to give it breathing room because I do expect a bounce. So I don't want to just put my stop loss clear up here, right? I don't want to do that. But I want to put it below a swing low so that this price action here can happen before ultimately, according to the analysis, continuing up. So hope that makes a little bit of sense on Bitcoin. But yeah, Xander, just to finish up on the sweep thought, yeah, the banks have to have liquidity to fill their orders. They have to manipulate price. They know where stop losses are. Because if they don't have liquidity, if they don't have stop loss orders, right, if they don't have it, they can't place their orders. And if they do place a full order, let's say they placed a full order in my 4-hour demand zone. Okay, if they do that, if they put in their full order, where's my sorry, I forgot I'm on a different platform. I'm trying to find my my goodness, where's my crap at? There we go. Yeah, so if they put in their full order, if they hit the buy button on $1 million order, whatever the case is, yeah, they're going to get some. They're going to get some of their entry, but then they'll probably get some of their entry up here, and they'll get some of their entry up here. They'll get some of their entry up here. Okay, the point is they're not going to get the whole order down here. Price is going to move away so fast, they're going to get just ridiculous slippage for them, right? And some of their order won't trigger till up here, up here, up here. Well, they don't want that to happen. That's a terrible, horrible fill for them, right? That's horrible. And I know that didn't show up very well. But the point is they want their full order in down here. So they have to kind of layer it in, or wherever the zone is, right? They don't want a bad order, a bad fill. So anyway, that is why they move price around, so that they can kind of trick the retailers into thinking that, oh, they're going to make money on this point. And then they don't. It's a cutthroat world, is it not? Yeah. So anyway, that's Bitcoin. What else do we have? Number one asset at the moment, along with Bitcoin, is the Aussie Swiss and the Nikkei. So let's go take a look at some currencies. Aussie Swiss longs. Now the Swiss, remember, is tied with the pound as the most bearish asset, meaning it's missed expectations on most of its reports, the fundamental reports. So that's the weakest currency. I like this odds. Aussie dollars, again, it's a decent currency. Let's go back real quick to the Eco Surprise Meter, and you'll see that the Aussie is at 57. Okay, so it's pretty decent, but that's way stronger than the Swiss at only 17%. So it's no wonder that that's at the top of the list. Right? Now, the strongest currency at the moment is the yen and the CAD, where they're both tied at 67. But again, keep in mind, intervention with the Japanese yen potential. In fact, let's go take a look at the dollar yen. I just want to see where it's at today, because this thing literally could drop at any time. Now, I'm not putting money on it, but I do know people that have already put short orders in this area. like ridiculous, big, well, I don't want to say big, but meaning they're looking at probably a couple thousand, 3,000 pip stop losses. Well, not stop losses, I'm sorry, but profit targets to the downside. So if I zoom out, dollar yen, okay, 159. Over here is 161. It actually got a little higher, but in each case, what happened? Bzzz, just big, gigantic, ugly drops. Big, ugly drops. Okay. This one, well, there's another one over here. So it's just one of those zones, guys, the 160, where a lot of interventions taken place in the past. So I'm just really not too excited about the dollar yen pair at the moment. Yeah, I could definitely see that thing dropping a couple thousand pips, but to me, that's not really a whole lot. I mean, yeah, I know that it's a possibility of happening, but it doesn't jive with my rules. I don't just get in and try for 2,000 pip moves on chance. I don't know. That's just not my style. So I'll let the people that have done that before do that, and I'll just stick with not trying to get involved in a 2,000 pip move. Maybe someday, but on my challenge accounts, heck no. I'm trying to pass the damn things. I'm not trying to get a breached account. It'd be a little different story if I had my own cash account. I would definitely probably take a stab at a short, but not with a challenge account. No thanks. Anyway, Aussie Swiss. Let's go take a look at that, since that's currency pair number one. Turn my drawings back on. All right, so daily time frame. Let's see what we got. Well, if I look all the way down here, all these candles are overlapping candles to the left and to the right of them, are they not? So all this looks pretty efficient. Okay, that candle overlaps that candle. That candle overlaps that candle, that whole thing throughout this whole spot. So that's efficient price structure. The banks like inefficiencies. So where's the first inefficiency? Well, if we go back down to this other swing low, which is the origin of a strong move up, same thing. Do all these wicks and candle bodies overlap each other? Looks to me like they do all the way until we get to this candle here. Okay. That candle right there. That is the closest demand zone with the gap above it, right? So we're looking at the top of this wick, we're skipping the leg out, and we're going to the bottom of the second candle. So this is our gap. This is our inefficiency in the market. This is what the banks like to tackle. Now, I got to be honest, because you guys know I love finding things wrong with zones so that I can disqualify them as soon as possible, because I think of myself as a retired trader. What the hell do I mean by that? Meaning, it's got to be a damn good reason to get me out of retirement to go place a trade. Is it meeting all the odds enhancers? Perhaps I understand what's going on with gold lately. What's with these market gaps every Monday? It's not respecting normal market structure. Yeah. Tweets. Right? Truth Social posts. Kidnapping presidents. Basically geopolitical stuff. Gold itself isn't really getting a bullish signal at the moment. In fact, I think it's neutral. Let's go take a look. So silver, oh wow, silver dropped too. So silver's at a 4, gold is a little deeper down. Where you at, gold? Where did my gold go? Gold. I don't see gold. Is it on my top setups? Ah, okay. Gold's a +5 now. Yeah, basically a lot of those geopolitical events, man. I mean, it's been bullish forever to start with. Let's go look at gold. Turn all my drawings off. I mean, you guys have seen the same charts I'm seeing. straight up, straight parabolic. This is a weekly chart. And then you're getting your gaps. Yeah, like you said, big gap. Let's take a look. Probably because of the trade war. This is probably a big reason right here, this article. Yahoo Finance. Trade war is back on. EU lines up $108 billion tariffs on the U.S. What does gold thrive on? Gold and silver. Gold and silver thrive on chaos, right? EU has an $8 trillion sell America weapon to hit back at Trump. Okay. So, yeah, it just thrives on chaos. So, again, Venezuela, our dealings when we went and bombed Iran, okay, our military, all those types of geopolitical events have a big bearing on gold and silver. It loves chaos. That's partly why it's been just going. I mean, it's been going up for a few years in all fairness, but it thrives on chaos. And it doesn't really matter what administration. I mean, whether it's Joe Biden, whether it's President Trump, this thing's just been going up because there's just so much uncertainty. And I think a lot of it is because of the social media world that we live in. We see every little thing. Everybody has a camera on their smartphone. They can take pictures of everything. Think about Michael Jordan when he was like the number one basketball player back in the 80s, 90s, late 80s, early 90s. Can you imagine all the crap that he probably did and got away with, all because there was no social media? My favorite team is the Memphis Grizzlies when we're talking about basketball. John Morant, awesome talent, but the dude cannot get out of his own way because of how many times he's gotten caught on a video or a picture having a gun or, acting silly, acting a fool. So it's like so annoying to be a fan of teams when they got, immature people that are just trying to ruin it for themselves and the team. So when it comes to, I say that because that's not something they had to deal with in the past. Didn't have all the social media, didn't have the videos on everybody's phone. Got away with a lot of crap. But now, because we see every little thing, all the protests going on, obviously Ukraine, Russia war, all the hot spots, gold and silver thrive on chaos. Okay. It thrives. So that's a big part. That's a big reason. But yes, of late, it's definitely going to be the tariffs. Okay. The tariffs. So like you said, got a big old gap up. And I didn't even notice this was on my bullish setups. This just appeared. This literally just appeared like within the last half hour. And it's no surprise. So now what happens? Now what do we do with gold? Well, gold's at an all-time high, isn't it? Yeah. Can't do anything with gold. I have to have a discount. I do not want to get involved in buying something that's at its all-time high. It's got to get a discount. I have to have a discount. I don't want to short it either. That would be stupid because this chart is littered with short sellers with their, this is a short seller's graveyard. Getting a little bit of pullback, thing is dropping, and then just getting squeezed out, right? Short squeeze. Sucking in them shorts and smoking them fools, right? So I just need a discount. If I'm looking at gold, because again, I am now that it's bullish, I got to find a daily demand zone to start with. Well, it looks to me like this one down here is probably going to be a decent one to start with. This candle here. I have my. Oh wait, I'm sorry. Yeah, I do have this. That's right. I forgot I had one here. So got this daily demand here with the leg out, breaking structure. And if you look at this thing on a 4-hour time frame, we have a 4-hour demand zone at the bottom of the daily. So there's my confluence I like to see. I like this area because on a smaller time frame, I had a demand zone bounce, from this point that kept going. So I feel like I've got a little bit of confluence from bouncing off some previous zones to help aid this move up and break a structure. So now I just need to return to price. I have a gap here, that little white box. As far as the 4-hour zone, you can see my leg out candle, my VSA candle spiked, meaning, smart money involvement. Okay. So now I just need to return to price. Oh, and I think, oh yeah, Mr. Peeps. I forgot I put this line up last week. Mr. Peeps was looking at this area too. So yeah, that's ultimately probably my gold play now. And not only, well, and I have to change my curve analysis too. So I had my curve analysis where this was the swing high, this was the swing low. I like buying in the bottom third of the curve analysis, but now I got to adjust it because we've got a higher move. We got that gap up you were talking about, right? So that's probably where I'd look at it. But if somebody wanted to be super aggressive, okay, we could drop to a smaller time frame. Look at this swing. Look at this as a swing low. Because you got just a big gap up, Sunday gap. Well, I don't know, let's drop to a 15 for a second. You had a lot of trading activity take place down here at this origin, if we wanted to call that the origin of a strong move up. I mean, that's a decent looking 30-minute demand zone candle with volume. But the problem is when we had our leg out candle, we bounced into this supply zone and just kind of went sideways because this was a supply zone for a while right here. This right here was a supply zone. Okay. Price left this area, bounced in the supply zone, and that supply zone kind of weakened it. That supply zone proved that this 30-minute demand zone candle wasn't really that strong, because if this 30-minute demand zone candle was strong, if it were strong, it would have just blown right through that supply zone like this and kept going, you know, breaking these structures up here, but it didn't. It just hit the bottom of it, just went sideways, right? That's how I know that this candle, this demand zone, doesn't appear to be that strong. So I don't want to use that as a potential place to buy. Okay. I need to delete this. I need to delete this. I need to delete this. Go back to my 4-hour. So, and we had a 30-minute demand zone right here, this candle. And as you can see, oh, that was beautiful. That dropped in on Friday in the London-New York overlap and just wicked in beautifully to this 30-minute candle. Let's take a look at this. This 30-minute candle where the volume started increasing and just wicked up nicely. I mean, that was a beautiful, beautiful move. But I wasn't too excited about it. I was not too excited about that move because at the time, I think gold was giving me a little bit of a neutral reading. So anyway, not really interested in gold unless we get kind of a steeper drop, a steeper decline down here. Now, I am going to put an alert on because, like I said, gold just popped on my bullish signals here within the last half hour, hour, something like that. So let's just throw it out through the end of the week. And now we have an alert set above the proximal line of the 4-hour demand zone, which is also showing confluence because it is inside of a daily demand zone. So that's going to be my play right there. Again, this demand zone, the combination of the 4-hour and the daily, broke a structure on some decent volume. And yeah, it kept going. So it didn't just break the structure and go sideways. It broke it and kept going. So I like it. But at this point, I have to delete that box now since it's already worked out. And we'll just get rid of this as well, just so I can clean it up. Oops, I didn't mean to throw away your line there, Mr. Peeps. Let's throw that back on there. I told him I was going to put his line up there. Mr. Peeps. We'll see if he pops back on. That way we can remind him of it. But anyway, silver, again, silver's down in neutral. I was keeping an eye on silver because it kind of had a similar, and it's a very dynamic list. It may very well come back into some bullish territory, just like gold is. But if it does, then I've got a demand zone confluence waiting on it as well. So I got an alert at 79.17 area, waiting for the 79 bounce. Okay. So gold and silver for you. What else we got? Latest jets. Why does Trump do this to me? I can't trade my favorite pair. Yeah, you know what? He shakes and bakes. He gets a lot of stuff done, but yeah, it is kind of look, I tell everybody, love him or hate him, man. You gotta have him. You gotta follow him on Truth Social. That's his platform, right? Who cares if you like or hate the guy? It doesn't matter who the president is or premier or prime minister. But we all know how explicit he is about telling everybody exactly what he thinks. So it is a smart idea to get on here just to pay attention to what he's throwing out, because when it comes to oil, gold, silver, Bitcoin, I mean, stocks, indices, everything, currencies, the crap that he puts on here has the ability to move markets. And if you're wanting to get news as fast as possible, do you not want to go straight to the horse's mouth? Right. So, yeah, you can bet your bottom line. Every time my computer comes on, I've got Truth Social straight on to Donald Trump sitting there because I want to see what he has posted. Because it affects a lot of crap, guys. Okay. And then the same thing with X. I use X quite a bit to follow different people, premiers, presidents, all kinds of different people that move markets. Okay. So it's just a good idea if you guys are looking for just like another news source. That's what I use X for. I don't use X to communicate or talk to friends or family. I use this to follow people that move markets, that move currencies, that move the indices that I like to watch, gold, silver, okay, Bank of Canada, right? The Swiss National Bank, high influence people, the Trumps. You have to see what they're talking about. Bloomberg TV, okay? Reserve Bank of New Zealand. So it's just a good idea, in my opinion, to take and Michael Buttress. I mean, David Song. These are guys, Tyler Hill. These are guys that work at Forex, FX Street, okay, that talk about the technicals and the fundamentals of all the assets we trade. So it's just a good idea to just follow. There you go. There's Donald Trump again. Now he doesn't use X as much as he does, obviously, his platform, but it's just a good idea to follow all these people, and that way you can click on following, and it'll show you all the the various things that they're saying. And I probably need to even go in here and delete a lot of these, because I think I've kind of inadvertently gained some people that just put a bunch of crap on here, junk. But nevertheless, I digress on that, and we get back over here to the top setups. What else did I want to go through? Let's take a look. Wow, look at that. My list just thinned out. That's actually the thinnest the list has been in a while. Yeah, Aussie Swiss, and let's look at New Zealand yen as well. I want to go look at those. Aussie Swiss, New Zealand yen. I was on Aussie Swiss a little bit ago. Yeah, so Aussie Swiss, just to kind of finish out. Now, this is a lovely setup, I think. Just going back to my daily, just to recap this, we got this daily candle here. We go to the 4-hour. We got a 4-hour demand zone inside. The gap could have been a little bit nicer. Oh, wait, did we even have a gap? Let me look at this again. Oh, yeah, that was a tiny gap. Very tiny gap. So I don't know. I may not be too excited about this one after all, but nevertheless, we do have kind of a double, triple bottom of the wicks above it. So this is one thing I like to see ahead of my zones. I like to see liquidity, okay? You were talking earlier about liquidity, Xander. That's exactly what we're getting here. This is exactly what we're getting here, because you got these buyers that moved price up, okay? And these buyers here that moved price up, putting their stop losses down below. So what's the opposite of their buy orders? It's sell orders. And what do banks need? What do big banks and smart money need to fuel their buy orders? They need these sell orders. They need their stop losses. Oh, by the way, it just so happens to be right above a demand zone where there's other potential unfilled orders. So you add those two together inside of a confluence, that's a pretty strong place for the banks, the smart money, to fuel their buy orders, okay, to the upside. So I like it for that reason. I just dislike the fact that we didn't have the greatest volume, and we didn't have that strong of a gap. That's a -1 on both of those accounts. Because if I draw up my gap on this 4-hour candle, guys, this is going to look really bad. There it is. That little white box is the gap, because we're talking this candle here, right? This would be our leg out. So really, that just looks bad. I mean, we could look a little higher up. Okay, there is a little bit, there's a gap here, but what happened? Price already touched. See, if we connect the top of that candle, because that candle had a pretty good gap above it, but it's already been touched. It's already been filled. So I can't use that. So this is not going to be a full position. This is going to be a partial risk. Let's drop to a 2-hour. Does that change things at all? Barely. No, not really. I mean, there's your gap on a 2-hour. Okay. 1 hour is the lowest I'm going to go on this. Let's go what we got on a 1 hour. We got anything decent on a 1 hour? Not really. God, it just looks hideous. The smaller time frames aren't helping. This is efficient price structure. Okay, all these candles are overlapping each other. We had a gap here. We had a little bit of a gap right here. But what happened? What happened? That happened. Okay, this candle closed the gap, touched this demand zone, because this was a demand zone, because this was a gap, right? But it touched the demand zone, collected those unfilled orders, and moved up. So that makes it an efficient spot. Have you traded the DAX? No, not yet. I've been watching the DAX for probably the last 8 or 10 months, but it's just consistently been neutral on the top setups. I've had a small handful of times where it's been on the bullish side of things, but just never got any retracements back in any zones I've liked. But right now, the DAX is giving us a neutral -1 score. So it's not really giving a very strong score. We can take a look at the chart, though. Oh, and one other thing. As far as the put to call ratio, that's one thing I wanted to go through with you guys real quick. Put to call, I need to go to crowd sentiment, put to call. And I was looking, I think the DAX was actually giving a little bit of a sell signal, if I remember right. Let me go look. Yeah, look at this. So the DAX has very high call volume going on right now. This is the options market. So this is what we like to look at as a contrarian signal. The options market is very bullish on this. So if the options market's very bullish on this, do we want to join the crowd, or do we want to observe the masses and do opposite? Okay. Because remember, it all goes back to that liquidity question you had earlier. Where's the liquidity? They attack our liquidity, right? This is what the banks are looking at. They want to see, just using DAX as an example, the traders are net long. So what does that tell the banks if the traders are net long this asset? That tells the banks that down and to the left is liquidity. There's stop losses, right? And you can see the stop losses on the charts. So if those stop losses are there and the banks want to accumulate a position, they have to go move price to those price points, to those liquidity pockets, and take that liquidity, right? So I wouldn't want to be buying this market. If anything, I'd be wanting to sell it. But again, we're really only getting a -1, so it's pretty neutral. So it's -3 on the fundamentals. It's a -2 on the sentiment, meaning the combination of the sentiment, the retail sentiment, the banks, that kind of thing. But the technicals are giving us a mixed message. It's giving us a +4. So, ideally, you want to have all three of these categories in the same direction, whether that's negative numbers or whether that's positive numbers. In this case, you're getting 2 negative analysis readings and 1 bullish one positive. So it's not jiving. But let's go take a look at the chart on the DAX just to get an idea why it's giving us a bullish 4, a +4 score on the technicals. Where you at? There you are. And I do have about 12 minutes left. So if there's any other assets, you guys feel free to let me know. Yeah, I mean, this is easily a bullish move, right? We're looking at like a weekly chart as an example. Here's our swing low. It's a solid 2 months of upward move that broke structure. So it's an impulse leg. Higher time frame, that's an impulse leg, right? Drop down to a daily. Let's go find us a demand zone. Okay, we got a demand zone down here, all the way at the origin of the strong move up. That's a long ways away. And let me just go to, yeah, again, we're at all-time highs. So this is just like gold and silver. Do we want to be trying to catch a rocket? Do we want to catch an asset that's going to the moon and try to beat it back down? I don't want to do just like the Bitcoin trade idea that I'm in. I want to wait till it proves itself that it's going the opposite way again. Because if I keep getting higher highs and higher lows, no thanks. You know, for me to get excited about the DAX, well, we got a clear support down here, right? This is a clear support. So, you know, it's going to look, you know, who knows how it looks. But for me to be really excited about that, I'd be wanting to see some consistent lower lows, lower highs, and then get a close under this double bottom. And if we get a close under a double bottom like that, then I'd be happy to find a short, find a supply zone somewhere in this leg to go down, right? It's a longer term play because obviously that's not something that's going to happen this week. Okay? We need to have a series of lower lows, lower highs if we wanted to stay on the side of the bearish analysis groups, which was the sentiment and fundamental analysis. But if we want to stay on the bullish side because of the technical reading, then yeah, we've clearly got a set of demand zones down here. We have another demand zone here, okay? Kind of a rally-based rally. This is daily. So, and it's also former, resistance points. Right? That demand zone, if we look to the left, okay, former resistance, right? So I like that. Technically, I love that area. Let's go look at a 4-hour. Do we get a confluence? We sure do. Okay. There's your 4-hour demand zone confluence inside of a daily demand zone. And in both of these time frames cases, we got gaps up. So here on the 4-hour, there's our gap, our fair value gap, our acceleration gap. And this is at the bottom. This is another reason I like this demand zone. It's at the bottom of the daily, meaning I can very confidently put my stop loss below the daily zone, knowing that it's not really adding much, not really taking away a whole lot of reward, if that makes sense. Because now your stop loss is below the daily and the 4-hour, and it's not that far. So that's a pretty good technical setup. That's a very good technical setup for somebody that's just a pure technician. That's one hell of a setup. I just don't choose to do that unless we get some changes on the fundamental and sentiment scoring. Because again, the banks, the big banks, the smart money, they don't care about a chart, just the chart. They care about GDP, the retail sales, where the liquidity's at, meaning sentiment analysis, right? Retail sentiment. So it's just a combination of things. It's a big puzzle is what it is. But guys, as always, that's why I have this Edge Finder. If you are interested in checking this thing out, I would highly suggest you go to a1trading.com. Now, I'm not affiliated with these guys, but I do appear on their streams from time to time. In fact, I think I'm probably going to appear on it again this week. I need to get back over here and check. They did ask me the other day. Yeah, I just haven't gotten a reply yet. So a1trading.com, again, I'm not affiliated with them. I don't make money off sharing this. I just share it because this has single-handedly changed my trading. a1trading.com. They have a lot of promos, periodic promos on here, but it's called the Edge Finder. Okay, right there, Edge Finder. So go check that out in your free time. If you have any questions, ask me. but that will single-handedly change your trading. Really will, because it gives you a very quick glance at everything, the fundamental and sentiment scoring, really quick. And then all you do is once you get that signal, after it's evaluated all these items, that's where you go time it on a chart. Okay, I just choose to use supply and demand because that's I spent 12 years studying the supply and demand zones, so that's what I like to use. Let's see here. So yeah, there's your German 40 there. Euro Aussie, Euro CAD. Let's take a look at these shorts. So remember, the Euro, the Aussie, and the CAD are pretty decent scores, pretty decent results from their forecast. The pound is this is probably my favorite one. So the Aussie is relatively strong, the pound is relatively weak. So let's look at pound Aussie, because I think that's the one that's been on there for quite a while. Pound Aussie, pound Aussie, pound Aussie. There you go. Yeah, here we go. Now this is a beautiful setup. Beautiful setup. I got a couple confluences, but my first one is obviously right here. Let's turn the drawings off just for a second. Okay. We're looking at that green candle right there. That's an indecision candle if I've ever seen one, right? And then you had three beautiful big green, big red candles come, close below the structure over here. Okay. So give me a return to price there, and I'm in a short. This might even be a limit order. Okay. So just going to a daily for a second, just to get an idea. Green candle with a gap below it. So on a daily, this is and I use the wicks. Some people use the bodies. Okay. I use the wicks. I just use the whole damn thing. But if I'm looking at my gap, there's my gap. Now, again, it's not the strongest gap in the world, but it is a gap nevertheless. Go to a 4 hour. Okay, my gap here is going to be looking really damn good. Got to admit. Pretty good. We'll call it pretty good. How about that? So there's my 4 hour gap. So I got a daily gap. I got a 4 hour gap. I got three big red candles, expanded range candles after the runaway from the zone itself. You see, I've got my alert set here just below. Now I've got a white line a little deeper. That's because on a 1 hour time frame, if we zoom in, now I've got some choices to make here, right? Remember, the red rectangle is my 4 hour zone. But if you look here on the daily or on the 1 hour, I've got a candle a little lower. So let me turn my drawings off. Okay, now I'm looking at this 1 hour candle. Now my 4 hour, remember, it's up here. So I just want to keep an eye on this. Perhaps I would front run it and get in just a hair early, because that 1 hour is pretty sharp too, I got to admit. Look at that 1 hour. Okay. 1, 2, 3 big red candles coming out. You get a little bit of a basing action. So we got a drop, base, drop. Okay. So right now, that's why it's slowing down, because it's running into this drop, base, drop. This is a supply zone, but it's not the supply zone that's closest to the origin of the strong move down. That's this one. Okay. 1 hour, 4 hour daily confluence. Again, the 1 hour is a little bit deeper because if you look, okay, the 1 hour is starting down here. So I'll probably just end up waiting for it to touch the 4 hour, because that's really where the higher time frame confluence is. The 1 hour by itself is not a signal, but the confluence of the 4 hour and the daily, that is, because that's big bank territory, right? So that's going to be my play on pound Aussie. I really do like that one. We'll see if we can get it to touch some point today, possibly. That'd be nice. Just go ahead and pop on up here, and I'll be shorting this market at least down to this low down here, right? So that would be the play on that one, on pound Aussie. Again, pound weakness, Aussie strength, relative. Let's look at Euro Aussie and Euro CAD while we're at it, since that's the other two bearish. Euro Aussie. Okay, Euro Aussie is going to have a similar type of a structure, and it's, in fact, well, I don't think I want to look at that as a daily. I mean, 4 hour. Look at this. Is this not a 4 hour supply? So I'd probably be looking at this little smaller time frames. I don't really have a good looking daily supply on this thing. But if I go to 4 hour, I got a really nice looking 4 hour, except, ooh, it did not break this structure, did it? Yep. So that might be a -1. That's a -1. What's a 1 hour give me? Yeah. If I go inside of that 4 hour, I don't know. I mean, yes, I'm getting some confluence. There's a gap, the tiniest of gaps there. There's a bigger gap here. So this gap looks a little better for sure, to where I could basically use this candle here as my 1 hour. So it'd be a 4 hour, 1 hour confluence. But I just would have rather seen it break this structure over here, and it didn't do that. It wicked just above it before reversing. So yeah, I'm probably going to ignore Euro Aussie. That's not the strength I want to see. And I wanted to see that on the 4 hour. On the 1 hour, this thing looks good because it broke these structures. But I'm looking at it in the context of the 4 hour, and the 4 hour did not. Yes, it broke this structure, but I just feel like we needed a little more strength on this. So I don't know. I'll keep an eye on it, though. I will. I'm going to go ahead and put an alert there just so I can watch it. And if we get a bearish engulfing candle inside of there with some volume spike, if we get a break of structure, the downside on a smaller time frame, we could possibly take a stab at it. I just wouldn't be putting a full risk on it. If that makes sense. So let's go in here and just throw that out through the end of the week. Get my time up here. And we are just about out of time, ladies and gents. We are almost at the top of the hour. Yeah, for me, it's all about Bitcoin. I'm going to be watching this thing for the rest of the day and next couple of days. I do like the zone I got in on. Again, we bounced into this. Well, I didn't have it drawn up on this chart, but yeah, 4 hour. This 4 hour demand, which is what we bounced into. So this is what I'll be watching. Just looking for it to kind of slowly go up. Again, if we get up here to this supply zone, because I've got my take profit up here. Now, that's just a target. That's not, I have to close it out here. That's just a target. But ultimately, I want to keep an eye on this area to see if it can bust through the supply zone. If it does, great. If not, I'll have a stop loss moved. I'll have my stop loss trailed. So just always keep that in mind. Get rid of risk as soon as absolute possible. But don't get rid of risk too early, because you still have to give it some wiggle room. Like, it would be way too soon for me to be moving stop losses anywhere in this area. If it gets up in this area somewhere, again, it gives me that 1-to-1 reward risk, potential profit, then we're set. We'll do it. We'll get it moved. So anyway, that's all I got for today. Ladies and gents, you have a wonderful day, and we'll talk to you tomorrow, 6:30 a.m. Later.